Welcome to my channel. In this video we are going to be handling depreciation of assets. We shall start by defining what depreciation is. Depreciation is a gradual or permanent decrease in the value of an asset from any cause. The decrease in the value of an asset, that's what we call depreciation. Depreciation applies to only fixed assets. Fixed assets are those assets that stay in a business for a period longer than 1 year. So it is only for fixed assets. And then we have amortization. Amortization is, depreciation is for tangible fixed assets. Then amortization is for intangible fixed assets. Well, we have things like goodwill, software, things like that. So intangible fixed assets amortize, they don't depreciate. Then depletion is for natural resources. Natural resources, things like oil, coal, they deplete, they don't depreciate. So that is depreciation. Let's look at the features of depreciation or the characteristics of depreciation. First is it is a decline in the book value of fixed assets. A decrease or a decline in the book value of fixed assets. Then it is a continuous process, like it is continuous until when the useful life of the asset is done. Then it is a non-cash expense, like cash is not going out of the business, but it is an expense. It is recorded in the profit or loss, but it's not recorded in the cash book because it's non-cash. So it is a non-cash expense. Then it is an expired cost. You incurred the cost but long time ago. It is an expired cost. Then it is only used for tangible fixed assets. And those are the characteristics of depreciation or the features of depreciation. So let's look at the causes of depreciation. So the causes of depreciation, what causes a decline in the value of the assets, fixed assets? So we have the external causes, and then we have the internal and then external causes. So internal, we have things like wear and tear. Wear and tear, like if you've overused something, it wears and then it tears. I don't know if that is enough explanation, but wear and tear comes in like maybe if you have a car and then you've overused it, so it wears and tears. That's what I can say. Then misuse, like if you do not use something in the right way. If you do not follow the instructions, it will end up losing value. Then reduced demand. In case there is a reduced demand, like the machine or the asset will be underutilized, then it will depreciate. Then changes in production, it can increase in production, it will mean that you're going to overuse the assets, so they'll end up losing value. Or a decrease in production, it means that you will underutilize the assets, then they would lose value. You will underutilize the assets, then they will lose value. Then the external causes, we have things like time. Things lose value with time. Remember, long time ago, iPhone 6 was a big deal, now it's not. So, time. Then accidents. If a car gets an accident, it loses value, some value. Then obsolescence, it's something like getting outdated. So those are the causes of depreciation. Then the factors that are considered in measurement of depreciation. What do we use when we are measuring depreciation? First is the cost of the asset. We look at how much the asset was costing. Then the useful life. The useful life, like the time it is supposed to function or work. It can be 3 years, 4 years, 5 years, depending. Then residue value or the disposable value, the value of the asset at the time of disposal. So these are the 3 factors that we consider in measurement of depreciation. Then how do we calculate for depreciation? We get cost minus the residue value or the disposable value divided by the useful life. And that's how we calculate for depreciation. That's the formula for depreciation. Then we are going to look at the depreciation, the methods for calculating for depreciation. There are very many. I'm going to give you only 2 that are important in this accounting. So these are the 2 common methods of depreciation. We have the reducing balance method, then the straight line method. So for the reducing balance method, depreciation is calculated on the net book value. Then for the straight line, depreciation is calculated on cost. That is the difference. Let's have an example. In case the asset, they tell you that the asset maybe was cost 1M, and then they tell you that its depreciation is 10% on straight line. So when we are calculating for depreciation, it will be 10 out of 100 times 1 million, like that, times 1 million, then it will be 100,000. And then 100,000 will be the same for all the years. That is straight line. You calculate it once, and this depreciation will be the depreciation for year 1, year 2, year 3, year 4, depending on the useful life of the asset. But then when, in case they tell you that it is reducing balance method, depreciation is calculated on the net book value. But for the first year it will be 10 out of 100 times 1 million, which will be 100,000. Then for the second year, we shall first get the cost minus depreciation, then times the 10%, like that. So 1 million minus 100,000 into brackets times 10 out of 100. So it's 900,000 times 10 out of 100, which is 90,000. So the depreciation for year 2 will be 90,000. Then for year 3, you get 900,000, this, the net book value, 900,000 minus the depreciation, 90, then times 10%, like that. So you keep on reducing. So for the reducing balance, depreciation is calculated on the net book value, but for the straight line, it is calculated on the cost, and it is the same for all the years. Then the accounting entry for depreciation, we debit the depreciation expense account, and then we credit the accumulated depreciation account. That is the accounting entry when it comes to depreciation. So thanks for watching. In the next video we shall continue, and then we shall get more explanation on the accounting entry, then we shall have an example. Thanks for watching.